G'day traders and investors. My name is Sam from Trade to Prosper, an online training platform with video content and documentation for many strategies. Um, so let's look at Polygon or MATIC. And one of the followers that I have on YouTube asked me the question, what do you think, what's going on? I've always had this thought that we can't possibly go further down, but time will tell. But I'll explain my thoughts, and then you come with your own conclusion. So this is a chart that has no log on. That's a log chart. When you do that, it looks different. Take the log off, and you see this. In general, just a general rule, price usually returns from where it started, and that's where it started really. So this was the base, and what we had from a macro perspective is a parabolic move. This is the second phase. This is the third phase. And if we continue on, it's actually a fourth phase there. And then we have this blow off top. So when you look at this chart, and now let's chuck the log on, you can see clearly there's the phases. This is parabolic. And in general, what we represent parabolic is some curve of some sort. And once it breaks that, it's pretty much down. So this does fit a parabolic move, and the base is where it started from. Now there's a lot of ways of looking at this. A lot of people cover it, but I like to think that from just a parabolic perspective, it will return to where it really took off from the base. Now, what we can say is from the base, we'll look at the volume profile of control, and this is what it tells us. Okay, so what we have is there, right there. That's very possible to come down to. That's one theory. If you look at this, we have another volume there of some sort, and we can say roughly there. Okay, we just put these in, and now we can get rid of that. What else can we see is that we also had phases on the way down. So this is definitely a phase, base, but it's on an angle. So we can say that, okay, and Bitcoin sort of represents that. It's a big macro breakdown. So this, after we break that, that's what it comes down to. And this is capitulation. We do not have our breakout trade here, and it's likely to take place. But anyway, let's just break it down. This is the story. We've broken it down. So we will add our Fibonacci from the top to this bottom base and just chuck it across. And now what we see, if you look at it closely, 786, very clear support. The Fibonacci does take place. Yep. All these Fibonacci's do take place. Now let's take off these drawings. So this Fibonacci is taking place. There's no alignment with what we know. We can do two things. We can do the swing high, swing low, and that's one way of looking at it. And you can see if we remove that, actually leave it there. What I want to do is actually just remove the background color. And not sure which one it is. Is it that one? Anyway, we'll see how that goes. Now let's take the log settings off, and you can see roughly what it looks like from a non-log perspective. If price was to come down, if it's got another leg to come down, we'll explain why. It's likely to come to this level here, $4 or $5, somewhere around there, if price was to break this level. Let's look at it from a elliott wave count. So let's get rid of all these as we discussed, and where's the bottom? Okay, we'll leave the bottom there. What we have on the way up, alleyway count, and a subset of it. All right. Similarly, if we were to come down, that's one big subset. That's an assumption. So you can say that's 1, 2, and it does fit the model. 4 doesn't pass 3. I mean 1. So the biggest move usually with Elliott wave is 2 to 3, and that fits the category. 3 to 4 and 5. Now, if we were to play bearish, this is our range. These are our targets. Anywhere here is a target, and it fits the base model. So that's very possible. Alternatively, let's get rid of this. That's our ABC move. So we had our 5-wave minor, then we had this ABC correction, then we had this 5-wave count. And that's ABC. Again, our 1, 2, again 2 to 3, 4, it still points towards down, unfortunately. Now the question is, we're in this range, and it's really, there's 2 segments to this, broken in half. One segment pretty much did its job, so we can say that's half of it. And you can do an analysis here. It's a rising pattern, and realistically we had that move there, and that's all it was. Back to the top, this is a Wyckoff. This is a second Wyckoff. We might have another Wyckoff from a big picture perspective. If we look at this as a reaccumulation, we have our selling climax very pretty clear there. From a macro perspective, we have our AR there, and our upthrust. And realistically, so we'll do our secondary test. Hold on, let me just get rid of that. And we had double bottom, yeah, phase B. So I am looking for the last area here, which is the spring. Okay, so I'm not prepared to say it's going to come down here, but you can't rule it out. The spring can actually go below this, and if we were to add this, where is it? Here we go. Just shrink it up with the log setting on, and we have this target, this range here. You might go further down, but never know. That is very possible as well. It's still on the cards, but I doubt it. My spring, I think, should be here. So if that's the spring, let's just draw this out. If price was to come down, and so far we got that. I think price, so this is the other aspect from my strategy. 618 does fit here, right there, on the way down. That's a key level. So if we drop that, it's likely to come down to this level. We have this broadening structure, which is bearish. Well, it's a channel. I think if we don't get a bounce there, we're going to get a bounce there. And somewhere around here, so you can see where it's going, there's going to be a squeeze. Either it goes up, or we get the spring like that, or further down. And this might mean that Bitcoin actually drops a fair bit. So while Bitcoin does what it does, if Bitcoin does pull back a fair bit, and we've got a chart here, it does look like it's going to be a bit of a bounce, but what we have is a bit of resistance here with this moving average, 6 golden ratio. We might just come down like that. And bottom of the channel, this is our liquidity. A lot of longs went in from here last week, so we might just dip below it, which is here. And it does make sense that we go there. What happens in that time when this drops? will affect um, a link as well. So link could probably come down more, or it comes down more down here. And we just ignore this line here. So I'm giving a number of scenarios. No idea what's going to take place. We could also have this type of scenario as well. This does look like a rising wedge and shows weakness, in my opinion. Why is it weakness? When you have price that moves up, comes down, and ever so slightly higher high, and you can see the lower high is really in the mix. So even if it goes up again, it's really bearish. The way it's going up, it's a grind, low highs, and it's probably going to drop like that. The target for that is there and there, so it does fit the spring, the Wyckoff, and then it could go up there. However, I'll be looking to buy there, trade. I'll be trading here, buying that for the hodl, and if it drops more, depending on how it looks, if it really slows down and looks like just accumulation, just flat lines, then I feel like, yep, I'll buy some and then go up. I might just buy and just look at put a stop loss and then just buy here as well. So that is my thinking from a bearish perspective and a bullish perspective. Bullish perspective that this breaks above, hits here, comes back, and then up. So let's just do that. Do that again because there's a whole bunch of stuff there. So the bullish perspective that it breaks this level, and we see strength. And what it does is it does the ultimate, and then it goes like that, and then up. So if it gets to that level, I will be starting to be bullish, and I think that this is our LPS level, and it's actually just going to continue on, not do the spring. That's another model, a Wyckoff model, and then we look at what got targets are. I think that's a relatively good target, and you can see from just doing Fibonacci, if that was the bottom and doesn't go any lower, we can put our 618 there, and again we can see that taking place. Well, a smaller case scenario is only up to there with $13, which is still not bad from $8. And then we have this, I suppose, significant trend line of some sort, might be like that. And then we look at a pullback. If it was to go back, if it goes higher, great. We expect a full pullback, and then next bull market. I'm looking at it from that perspective, guys. Early wave count does say that it's likely to come down, but the formation does tell me that it's accumulation. Now, the longer it takes for accumulation, the higher it goes. That is a formula. The longer it takes, the higher it goes. This is taking much longer, so this could be humongous. Now, if we look at this from another perspective, let's have a look at that. Alt season is not ready. If you look at my other videos, that alt season is not ready for me. And so what we can see from here is, why are we bullish? Well, if this is our 1 and a 2, 3, it still fits the model for 4 and then 5, much higher. Damn, this could be huge, right? So what we can do is, if that's 2 to 3, then we can see roughly $200. You imagine the risk to reward ratio. It's worth it, even if it means that you just hold on and let it go. But the risk to reward ratio for the next few years is really this level. Even if it goes further down, it's worth it. It will no way would likely to come down that way. If it does come, if it does be bearish, even more so to buy here, right? And we've covered the reasons. So the risk to reward ratio is significant here. It's going to be a good buy, but I don't think it will come that low. But no one never knows. It might just come above this level, which is normal. That's, I think, Optimism and a few other coins did the same. But I won't go over it. But these are my thoughts. Could be wrong. We have two scenarios. This is bonding formation, reaccumulation to summarize, and up it goes. And then we look at the targets from a Fibonacci perspective. We've got this, and then we've got the macro. That's one way. The other one is that this is a way 3 to 4. It drops a bit more, and the bull market starts for it. So I'm going to wrap it up on that. Please give me a like and share. Come and join my YouTube channel. Subscribe, give me a tick, and I'll talk to you soon. Cheers.